On this board, we're talking about retirement. Now, what is retirement? Well, basically, retirement is the part of your life in which you are no longer working, right? So, the general game plan to prepare for retirement is to save up enough money in your retirement account so that you will be able to withdraw enough money each month from your retirement account to live your desired lifestyle during your retirement. Now, how much money do you need to have in your retirement account in order to live your desired lifestyle during retirement? Well, a general rule of thumb is that you will need 25 times the annual amount that you desire to live on, because in general, that will last 30 years. For example, if the annual amount you desire to live on during retirement is $50,000 per year, then you will need, in general, as a rule of thumb, you will need $1,250,000, right? Which is 25 times that $50,000 amount. Here's the thing: the earlier you start saving for retirement, the easier it will be to reach the amount that you need in order to live your desired lifestyle in retirement. This is due to the power of compound interest, right? The earlier you start, the more you can benefit from the power of compound interest, right? For example, at an average annual interest rate of 10%, which, the stock market, right? A good, index fund, stock index fund, right? A good mutual fund, right? It will be around like 10%, average around 10%. Of course, the stock market goes up and down, but on average, if you look at like the history, right, of the returns, it's around 10%. So 10% is a good, average number to use when we're doing, these plannings. So for example, at an average annual interest rate of 10%, a 35-year-old would need to invest $443 per month to reach $1 million by the age of 65. But an 18-year-old would only need to invest $79 per month. It's amazing, the power of compound interest. Again, the earlier you start saving for retirement, the easier it will be to reach the amount that you need in order to live your desired lifestyle in retirement. Now, let's go over some key types of retirement accounts. Here are some main types of retirement accounts. Number one, the 401k. What is a 401k? Well, it's a retirement account that is sponsored by an employer. So it's only available for people that have regular 9 to 5 jobs, right? And also, not all employers offer 401ks, but a lot of employers do offer it. All right. So it's a retirement account that is sponsored by an employer. You decide how much of your paycheck you want to invest, and your employer automatically takes that amount out of your paycheck and puts it into the account. And your employer typically allows you to choose from a list of options regarding how the money in that retirement account will be invested, right? Now, one of the benefits is that many employers offer some sort of matching of your contributions up to a certain percentage. For example, an employer might offer to match 50% of an employee's contributions up until the employee has contributed an amount that equals 6% of their salary, right? It's just an example, right? Now, another big benefit is that the contributions that you make into a traditional 401k is not taxed in the current year. However, you will eventually have to pay taxes on the retirement money as you withdraw it during retirement, right? Now that's for a traditional 401k. Now let's talk about a Roth 401k, right? Now a Roth 401k is similar to the traditional 401k, but the big difference is that the contributions you make into a Roth 401k are taxed in the current year, but the benefit is that the money in a 401k grows tax-free. And so you will not have to pay taxes on the retirement money as you withdraw it during retirement, right? So that's one of the main differences between a Roth 401k and a traditional 401k. Now, let's talk about an IRA. Now, by the way, so as I said, the 401k is only available for people that have like a regular job, employees. And it's only for companies where the employer offers 401k, right? But now, what if you're self-employed, right? What do you do? Well, IRAs, all right, are available for anyone, right? So IRAs, which stands for Individual Retirement Accounts, right? So what is an IRA, right? So an IRA is a retirement account that functions similar to a traditional 401k, but it is not sponsored by an employer. And so therefore, there is no match and the contribution limits are lower. All right. Now, what is a Roth IRA? A Roth IRA. Well, similar to the traditional IRA, but the big difference, right, is that the contributions you make into a Roth IRA are taxed in the current year, but the benefit is that the money grows tax-free, and so you will not have to pay taxes on the retirement money as you withdraw it during retirement, right? So these are just 4 of the main types of retirement accounts. There are many more, but these are like the 4 most popular types of retirement accounts. Now, I have a special call to action, because as I mentioned, the earlier you start saving for retirement, the easier it will be to reach the amount that you need in order to live your desired lifestyle in retirement, right? Because of the power of compound interest. You have to start early to save for retirement, to invest for retirement, right? So I have a special call to action. I want to encourage everyone to starting next month, I want to encourage you to make the commitment to invest at least $100 every month into a Roth IRA. Every month, at least $100 every month into a Roth IRA. Set it up so it's an auto invest, so you don't have to think about it, so that automatically the money is transferred from your bank account into your Roth IRA account, right? Your Roth IRA account, okay? Now, here's the thing, side note, regarding which mutual fund you should choose to be in your Roth IRA account, I highly recommend that you do the research, because look, all this stuff is for educational purposes, all right? It's for you to do the research. Don't just blindly follow my guidance. Take what I'm saying and research it for yourself so that you make a decision based on your research, okay? Now, so as I said, side note, okay, so yeah, regarding which mutual fund you choose to be in your Roth IRA account, I highly recommend that you research to choose an index fund, because an index fund is a type of mutual fund whose holdings match a particular market index, such as the S&P 500 index, right? So, for example, 2 index funds that I would like for you to really look into is the Fidelity 500 Index Fund and the Vanguard 500 Index Fund, right? These are 2 very popular index funds that track the S&P 500 index. Now, index funds have a lower cost than regular mutual funds because they are passively managed instead of being actively managed. So again, my special call to action is to make the commitment to invest at least $100 every month into a Roth IRA. Thank you for watching. I'll see you next time on the next video.